For recording purposes, Moody, this is the Strat Bootcamp Day 4. All right, who's it? Hold on. I just saw that 11 bang bang. It's Nietzsche. I'll take a screenshot right here. Let me see her name. I know she said something earlier, so I can make sure that's the name I get. There she is, Nietzsche. There we go. Gotcha. All right. Moody, don't go crazy and showing everything. All right, so once it's showing, I'll show you something. Right. So you're on week 2 right now. This is where we're at, right? With the strat, time frame continuity, right? You've went through all of these already, right? There's a lot of things it's just not telling you what it is, but there's a lot of videos to go through. However, yeah, never see nothing like this unless, well, it's not even unless, yeah, unless you know what I'm saying, pay for this course, which the course is not available anymore. Why? Because Rob's not here. And that's another reason why, like, I'm doing it for free. Why? Because I'm not the creator of this. You know what I'm saying? It's not right and it's not fair to Rob nor his family for me to like package it up, even if I'm on it and try to sell it or anything of that nature, right? So that's why I'm also happy that I'm doing it for the guests as well. However, it's definitely going to be for the members, right? Because they're investing into themselves, and yeah, it's like I said, if I have tools and resources, I'm going to share it with people. You know what I'm saying? Like whether it's business credit, personal credit, getting funded. That's who I am, right? If you need to learn how to build an LLC and do it correctly, and you need the right codes, it's all going to get implemented into the Discord, right? Anybody that I know and things of that nature, because that's what people are needing, right? It's not just about trading, people need that capital. People also have dreams, you know what I'm saying? People are also trying to get funded so that they can fund their dreams and things of that nature, and replace their jobs, right? I don't really like saying quitting your job because we don't quit anything in life. We just replace it or start doing something differently. If you quit something, you know how that feels. You get in this depressed state, right? So, all right, let's start the strat. There's going to be about 23 minutes and 10 seconds, right? So, in all actuality, it's probably going to be about like 45 minutes or about 35 minutes. Did I hear LLC? Yeah, you did. You sure did. All right, let's press play.
Hello, my friend. This is Rob Smith of the In the Black Quant Edge VTF here at T3 Live with the Quant Edge 4-week coaching program, week 2, where we begin to talk about time frame continuity. We've talked about actionable signals now for week 2.
And look, y'all, I'm so real. Y'all seen it? Y'all see is the quantum edge. Y'all could literally try to go find this on YouTube. It does says unlisted. I'm just being real with y'all, right? Y'all could try to find it. It's not going to be there.
We're going to go into time frame continuity. As you peruse over the disclaimer here, as we continue to go on, the good thing about taking our time like this is you can always go back, get to those actionable signals, and then in this time, we're going to talk about time frame continuity because we're going to start putting all 3 together, and that's going to be very important going forward. All 3 universal truths matter, no matter what you're thinking. Being like, I got it, Rob, and take the actionable signals. That's what causes price action to move. Everything matters, and we're going to put it all together slowly but surely. So,
slowly but surely.
when it comes to time frame continuity, we're going to have time frame participation groups. The universal truth of the opening price, the 4 C's of continuity, the importance of uncoupling, event continuity, combining actionable signals with time frame continuity, identifying natural buyers and sellers, and live charts. So we can go look at some of the stuff in the past that was well known. All right, section 1, time frame participate.
All right, section 1. Remember, this is a recording. You also have an expert on here. If any questions pop up, I can pause the video. I can rewind the video, right? Ask whatever you want to ask if it's going over your head so that I can be able to help you. Remember, I'm also going to do a part 2 of all of this once this is done. And I'm literally going to do it in the same structure. And I'm going to show you my way of implementing everything, right? So that's what I'm saying. The strat thing is an ongoing thing. I need you guys to truly learn this stuff, right? So again, if you have any questions, please feel free to ask, drop it in the chat, or unmute yourself, right? Get that confidence out of you, or in you. And as well, I'll be pausing it and, just adding on.
Groups. There's 4 major time frame participation groups. The 4 majors, these represent how we quantify full time frame continuity. Because of the importance of these 4 groups, when analyzing any futures, ETFs, stocks, or currencies, we always look at least 4 charts. Got that? At least 4. So
I know that went over people's heads, right? Why do I say that? Because anybody that knows the strat, they're going to use 4 different time frames, and they're going to go from the weekly or monthly, weekly, daily, maybe 1 hour, right? Because that's what you normally hear out of the strat. Please identify what he just said, whatever 4 groups you're going to use, right? I'll rewind that one more time just because I know it probably went over your heads, and hear how he worded that.
There's 4 major time frame participation groups. The 4 majors, these represent how we quantify full time frame continuity. Because of the importance of these 4 groups, when analyzing any futures, ETFs, stocks, or currencies, we always look at least 4 charts. Got that? At least 4. So oftentimes you'll see guys on Twitter and whatnot posting, this looks good, and they're posting 1 time frame chart. Completely incomplete, very, very incomplete. The work is not done. We're always looking at least 4.
Oh, why he wasn't trading.
The largest is the monthly group. The monthly group is defined by anyone that has put on, added to, or reduced a position during the calendar month.
I'm gonna pause that. Dang, why I do that? I need you to see this. 11 bang bang. The rest of anybody that's not gonna understand what I'm going to say, I'm going to be doing a class about this. 11 bang bang. Jared, if you're on here, I know we did a one-on-one session yesterday, and anybody that's been doing a one-on-one session with me recently, look at this chart and you see my reversal patterns, correct?
Yeah, I got you.
Yeah.
That's all we're trading. That's all we're trading. I'm not gonna say that's how he designed it. However, I'm gonna go get a clip from the interview that him and I did, that I did with him or for him, and I'm going to identify with that, right? There's a reason I only trade what I trade, right?
Correct.
May think a monthly chart is a daily chart showing every day that month. It is not. Monthly chart just only 1 bar to represent the entire calendar month. So here, this last bar here is just what's happening during that month. This is a complete month. All right, so that's what a monthly chart is. All right, and it tells us the larger move. Is this thing going anywhere? All right, on the monthly. The weekly group. Weekly participation group is defined by anyone that has put on, added to, or reduced or exited a position during the week, right? Anything that you're doing, if you're getting out of it, if you've traded at all, you're going to affect it. And so that you're part of the group. So this last bar is just last week for the Dow going into 20,000, right? So each bar represents a week. The daily group. Daily group is defined by anyone that has put on, added to, or reduced a position or exited a position during the day. Daily chart.
Okay, that's how I pause it. Remember when he was showing the weekly group and he was talking about that candlestick right there? Now you can understand me when I say that the daily is the biggest liar. That's why I don't listen to nobody that talks about a gap or, oh, there's a gap fill here on the day. You're a distraction. Let me stop listening. Like, I don't even want to pay attention to that because you can't see. You know what I'm saying? So if I take upon that information in my emotional intelligence, guess what? I'm going to fail with that person, right? Why do you see that gap here on the daily? However, you did not see that gap there. And let me close this. Let me rewind it a little bit so you can be able to see that. So I'm not just talking out my butt, because everything has to be backed up, right and exact. This is your weekly group. You see no gap because there was never a gap there. And it's especially, right, you don't see it on a weekly. You go to the daily, you see it. And then if you go down to an hour or anything smaller than the daily, doesn't matter what time frame, you won't see that gap as well if you have extended hours on, right? And extended hours is important to have on, right? Because you want to see what the price action, right? Because this bar is called price action. That bar is called price action. This bar is called price action. You start putting price action together, you start getting Morningstar, bear flags, bull flags. You know what I'm saying? Once you put the price action together, however, price action is one candlestick, right? And that's why we trade price action from a bigger time frame to a smaller one, trading one candlestick, right? And that's why we break down the candlesticks. And I've been teaching anybody that's been around me how to break down the candlesticks. However, I haven't given my juice, right? And I will give my juice now. So you'll go ahead and look at that, watch when the daily comes up, and you'll see the gap. You see no gap here, right?
You're going to affect it, and so that you're part of the group. So this last bar is just last week for the Dow going into 20,000, right? So each bar represents a week. The daily group. Daily group is defined by anyone that has put on, added to, or reduced a position or exited a position during the day. Daily chart only shows one bar for every day. So this is just one day.
That gap that you see there, when you go to a smaller time frame, you'll see it like this. With no gap, you'll see a wick going down or some bars and then it retracing. You'll see it like a regular candlestick. That's why it's important to trade off of extended hours and not regular time. However, either one that you choose, the Strat works wonders on both of them. However, you get better price action on the extended hours.
One day, all right? A lot of people mistake that stuff, so we wanted to get through to that. 60-minute group. Find money was put on, added to, reduce or exit a position in the 60-minute period, the bottom of each. And
when you know charts, you could tell Rob has real time on because you're still able to see that gap and he's utilizing the same Dow Jones. That comes with experience, like with me knowing about those two different types of not time frames, but sessions that you can trade off of.
Shower. 60-minute chart draws one bar for each hour, right? So that's how we can separate these four groups by time. Then there's also intraday participation groups. So just much like we have the largest monthly, the weekly.
Please pay attention to this. Please pay attention to this, especially if you want to be a Strat trader or if you're understanding the Strat. You'll learn, like, yeah, we look at the week, the monthly, the weekly, the daily, the hour. Cool. What are you doing now? We know what those time frames are measured for, right? And we're breaking down the time, the candlesticks, but also the time. Now you're seeing 5, 15, 30, 60. So what do you normally see Moody doing? 1, 2, 30, 15. And I may grab the 10. Why? Because I know what's happening, right? You're supposed to know what's happening with your neighbor, your other neighbor, the person behind you. That's how, I'm not saying that's how you make your decisions in life. However, you're being at work, if you got coworkers, you need to know what they're doing so that your time frame continuity can be on point with them. You know what I'm saying? Because those are the other participation groups, right? So look at the 5-minute. Oh, we're holding over the opening price of the 5-minute and we just went 2 up and we broke the high of the previous candle. And it's only, let's just say, 3 minutes left. Well, we have 3 minutes left for this move. Okay, move to the 30, move to the 15. How long do you truly have this for this move? You know what I'm saying? How can you truly capitalize off this move? There you go. I'll let him talk now. My bad.
The daily and the 60. We can also break things down to intraday participation groups, right? It's going to be the 5-minute group, 15-minute group, 60, 30, right? And so that can help us gauge the smaller participation groups against the larger ones, right? All this stuff's going to matter.
Oh, I should have left it there. So I'm just gonna tell you something, right? So whenever you hear like this entry is safe or this one is better or something like that, don't ever listen to that. That does not matter about an entry point. Entry points matter about candlesticks and levels. It's not about a time frame. You're hearing how we're breaking down the time frames and we're manipulating them, right? So if you have the wrong information, please do me a favor and erase that from your mind because it's going to be a detriment to your trading.
Section 2, universal truth of the opening price. This stuff important, all right?
It's important.
So what we want to look at is what does time frame continuity mean, all right? And so when we're using the larger groups, bullish time frame continuity or full time frame continuity to the upside is defined as the last sale being higher than the opening of the monthly, the weekly, and the daily, and the 60-minute. All right. So here you can see the 60-minute green. It's moving higher on the 60. Is it moving higher on the day? Yes, it is. Is it moving higher on the week? Yes, it is. Is it moving higher on the month? Yes, it is. All right. So it's going up on all time frames. That's what full time frame continuity means. Okay. So bullet.
Pause that right there. What does full time frame continuity mean? Anybody? You can drop it in the chat. You're gonna mute yourself.
That price is doing the same thing throughout all whatever 4 time frames that you're choosing to utilize.
Exactly. Exactly. Let me open up the chat. Let me see if they got it right. That's why you like that specific indicator. What indicator? I don't use the only indicator I use is the RSI. What indicator? Oh, you're probably talking about the Strat. The Strat's not an indicator. As you see his chart, you don't see those numbers. You see the numbers on mines because I am teaching the Strat, and I know that the next individual, if I say inside bar, they're gonna understand that. But if I say equilibrium, they're not gonna know that I'm talking about inside bar, but it is the equilibrium. However, if I say 2 up, you may not know what I'm talking about. If I say 2 down, you may not know what I'm talking about, right? Where this is a 3 bar, right? We already know that. Why? Because it broke the low and it broke the high. We know this is a 3-2-2 continuation. We know that this was, I can't tell you what this was because I can't see the bar behind it. However, this is a 3-1-2 reversal, bullish reversal, right? I normally, Tina, red to green, right? So, you know what I'm saying? Just like Tina, green to green on continuation, green to green, inside bar. That's the equilibrium. Pow. You know what I'm saying? So proud of everybody that said something. Y'all got it right. Let me go back in here real quick. Candles is the indicator. Correct. Your candlesticks, the direction is your indicator to know how to trade what you want to trade. Utilizing an
Learned that
indicator
from you, Moody.
is, I appreciate it. It don't matter. I gotta shout you out. I appreciate it. I appreciate the love. The candlesticks are always going to be your indicators, right? So the only indicator I utilize is the RSI, right? And it's due to the fact of me being able to read it very well, right? Because I do time frame continuity on the RSI as well, right? That's why you see me going through the different time frames, and I can always say, oh, this is my favorite setup. You know what I'm saying? Knowing that what's going to happen with the RSI and then looking at the candlesticks and taking the candlesticks as a confirmation, right? For me, it's just because I'm real. It's just how I feel. It could be completely different for anyone else. Indicators to me tell me that you're scared, you don't know what you're doing, right? Because it's like, oh, if this bounces off of this EMA or this, and you know, I'm not contradicting myself. Passive trades like that. However, he knows what he's doing. That doesn't mean he's scared. For me, that's what that means, right? Because when I put indicators on my chart, it's because I am fearful of losing something and I want to see something a little bit differently that'll give me a better feeling to trade this how I want to trade it. So that's why I don't like indicators, right? I like to trade naked charts. I'll utilize my RSI if I need to. However, the candlesticks is going to show me everything. And when I start doing like my classes on my universal truths, right, Tina, you already seen it. I'll be able to show you why these are the universal truths and why you want to trade this only. You don't want to trade anything else. And if you want to trade anything else, still trade these because you'll be trading. If you want to trade a bull flag or this or that, I will give you the pattern that creates it all, right? And I'll just tell you this, the sweet bottom is what creates everything. I know I have to show you for you to be able to see it. Tina, did you like when I showed you that? When I showed you the universal truths?
Yes, the tweezer bottoms and tops and morning stars, and yeah, it helps so much.
Big facts. What helps so much is how you're knowing how to read it now. Because anybody can say
Exactly.
that, but they don't know what to do with it.
Exactly. Because like you were talking about the cup and handle and everything, it all leads from that.
Exactly. All right, so let me keep reading this and I'm gonna play it again. All time frames are above the opening green or are all below the opening red candle. Jimmy, why you doing them like that, Jimmy? He said, I'm gonna give you the upside and I'm gonna give you the downside because I understood what he was talking about. So I'm like that. I feel you, Jimmy. I feel you. Show off then, baby. Oh yeah. You said it's not an indicator. Yeah, it's just not a. The reason people call it an indicator is because you have to go to the indicator section to find it and place it on your chart. However, once you know what a 1 is, a 2 is, and a 3 is, if you want to keep it on your chart, you can, or you'll take it off, and it's like you're not using an indicator. All right, cool. Yeah, facts. I love them tweezers too. All right, let's play this.
Bullish time frame continuity or full time frame continuity to the upside. We can go to bearish full time frame continuity, full time
Jimmy.
frame continuity to the downside. Right? It's defined as the last sale being lower than the opening of the monthly, weekly, daily, and the 60-minute. Once again, you go through here. Is it red on the 60? Yep. Is it red on the daily? Yep. Red on the weekly? Yep. Red on the monthly. Everything's going down as far as
Don't
we
buy
know.
call short.
Right? Okay, so it's extremely visual, and that's why when you look at 4 charts, you can see this right away. So if you look at this, this tells us the level of aggression of the buyers sellers is high, right? Everybody we know. This cannot be disputed because all known participants are buyers and the upside, or all known participation groups are sellers on the downside, right? That's why it makes it a universal truth of price action. You can't dispute that, right? You can say it might start going down, but at this point, anything that has full time frame continuity to the upside, that can't be disputed. Anything that's full time to the downside can't be disputed
At all.
It's also important because it represents when all participation groups are.
So like when you seen BW shout me out in the profits, that's what I was doing, right? And I'll tell you, where was that? Why was it gonna keep bleeding? Because there was an evening star on the hour. And when I said it, you had 20 more minutes to go ahead and short the market. So all you had to do was wait for it to bounce, buy any high green candle just to make it in layman's terms. Obviously, you want to buy the resistance and then you just hold it to short it down. You know what I'm saying? And that's like when we know that, like you seen Pastor do that on live trading on the rise. You also seen me do that plenty of times where, hey, it's not that it's a bear market. Bears are in, it's a downtrend. However, Moody ain't going for no puts, he going for straight calls and banging it out the park. Why? Because I know what to do. I know that I'm gonna be in and out. I know to keep holding the runners. If we keep pushing, then we get out and we can do it again. You know what I'm saying? Once it falls and things of that nature. Why? Because it's not that I'm bad on the put side. It's not that I'm better in a bullish side. I just know that it's a bull market. I don't care about shorting the market. If anything, I'm going to buy it. I see Tesla still buy more. Why? Because I know that it's going to pop. You know what I'm saying? So things of that nature.
Confirming each other and are in control. All right. So by confirming, 60 is reconfirming the daily, was reconfirming the weekly and the monthly. All right. Also important because it represents when all participation groups are confirming each other.
I got you.
You can't dispute that, right? You can say it might start going down, but at this point, anything that has full time frame continuity to the upside, that can't be disputed. Anything that's full time to the downside can't be disputed. It's also important because it represents when all participation groups are confirming each other and are in control. All right. So by confirming, 60 is reconfirming the daily, was reconfirming the weekly and the monthly. All right. All that kind of stuff. All that stuff's confirming each other. And we'll get to that. So we move along. And then continuity and conflict. Right.
I love it.
What that means is, right, anytime one or two of the candles are a different color than the others, the price is considered to be in conflict. Right? We don't have continuity, right? The participation groups are different. Here, the 60's green, daily's red, weekly's red, monthly's green, right?
And this is why I added my own sauce into the strat. Why? Because these are the days we can't trade, or these are the days we can't trade that security because it's telling us it's in conflict. However, I learned how to buy the bounces and certain things of that nature and use the time frame continuity to flip the time frame into continuity. Like if I'm going bullish, it flips into the continuity. And you know, people that have traded with me have seen that where it's like, dang, that was in full time. Yeah, I just knew it was gonna do it.
Conflict, right there. Shouldn't be too hard. Full time frame continuity or conflict. Intraday time frame continuity. Although we are always aware of these major time frame continuity levels, we're also aware of the lower time frames as well. Right? We define the intraday time frame continuity levels as 60, 30, 15, and 5-minute time frames. And the greater the volatility, the greater importance of intraday time frame continuity, because it increases what we were trading. Although we are always aware of these major time frame continuity levels, we're also aware of the lower time frames as 60 is green, daily's red, weekly's red, monthly's green, right? That's conflict, right there. It shouldn't be too hard. Full time frame continuity or conflict. Intraday time frame continuity. Although we are always aware of these major time frame continuity levels, we're also aware of the lower time frames as well. Right? We define the intraday time frame continuity levels as 60, 30, 15, and 5-minute time frames. And the greater the volatility, the greater importance of intraday time frame continuity, because it increases what we were trading. Is that this volatility increases, and the reason for that is because at that point that you can be seeing as much movement and volume in a 5-minute bar, a 15-minute bar that you normally see in a day or a week, right? And so as things are really moving, we can break it down further down to those shorter term time frames, right? And it also helps us to reconfirm even the longer term time frames. All right. The reason for this is because during periods of here we go. Sorry, movement, oftentimes volume, the lower time frames we'd normally see in higher time frames. What I just said. During periods of extreme volatility, such as like the opening stuff like that, it's a 5, 3, 1, right down to micro like that, and we even have times when we can go sub 1 minute, but not everybody's going to be cut out for that, and it's that's. But it does matter because
not everybody's going to be cut out for that. So shout out to everybody that really truly knows how to trade that 1 minute chart. Peace and love. Not everybody can be cut out for that. You see how he brought it all the way down to the 5, 3, and 1. Who do you see trading the market opening? It's a reason. Even if you're not a strat trader, you know something. It's not that you don't want to share it. Everybody wants to keep their gems to themselves. It's just me. I'm going to continue to have gems. You know how many courses I have?
When things are really gunning, there is no signal. The one is just going because news is out, and you've seen that on a spike like that. So as far as automated stuff, even a sub 1 matters, but all of this stuff ties into time frame continuity. What direction is even the 5, 3, 1 going? Section 3.
Important.
The 4 C's of continuity. Control. First, you got to ask yourself which participation group or groups are in control of the direction of the price. All right. So when you have full time frame continuity, everybody's going the same way, and we'll get to that. But control. Different groups can be at control in different times. Confirm. Are all the participation groups confirming each other? Right? They're all going the same way. If not, are they in conflict? Are some going up, some going down? Right? Just like we've been looking at here at the charts before. Change. Are the participation group or groups changing the continuity of other groups? Right? By green going to red, which changes a different one on different time frames. So we'll get to that in a second. But 4 C's once again. Control. Confirm. Conflict. Change.
I love the change.
All right.
I'm gonna flip you in
4 C's of continuity: determination, control through confirming, conflicting, or changing continuity levels. At all times, we need to establish which participation groups are in control and for how long, right? That'd be exhaustion. How long are these?
How long? Stop waiting for a freaking candlestick to close and make your decision. That is the most retarded thing to do in trading. That's not how you trade. That's how you lose. Profitable, not profitable. I ain't trying to shit on nobody. Just giving you the real.
Things, how much time do you have on it? The monthly group is the largest, thus represents the institutional group. The daily group is who is in control today. What direction is it going right today? The 60-minute group represents who is in control right now, as it is the most immediate direction. That's why the flip's so important, right? So monthly group shows us the big move. Daily group, what's happening today as far as time frame continuity? Is it going up or going down today? 60 minutes is going up or down right now, right? So the 60, all right, get that? Get it.
You get that? I ain't gonna that's what successful people do, unless you ask questions. You see how he slimmed through that? It's because that's very important. You see how he said, my bad, that's my alert. You just want me to go trade. I don't feel like trading right now. I'm gonna rewind it so that you can be able to hear it, right? Understand that, right? That 1 hour is telling us what's happening right now. What did I just say? Evening Star. It was on an hour. I had 20 more minutes to go ahead and short. The next person's gonna wait. Oh, wait, hold on. Let me let this candle close. Off of an Evening Star, you're gonna get a tweezer bottom, brother. You don't want to wait because it's going to reverse on the next candlestick, right? And that's not always the case. However, it's just doing the time frame continuity and knowing what's happening on those smaller time frames, because what happens on the smaller time frame is going to represent what's happening on the bigger time frames. What's happening on the bigger time frames is going to confirm what's happening on the smaller time frames. That's how it goes. I'm going to rewind it so you don't miss that.
Right now, as it is the most immediate direction. That's why the flip's so important, right?
Right.
So monthly group shows us the big move. Daily group, what's happening today as far as time frame continuity? Is it going up or going down today? 60 minutes is going up or down right now.
Okay, you
right?
got that.
So 60, all right, get that? Get it.
Get that? Okay.
Okay, so as we go through here, when the 60-minute and the daily groups are confirming, going the same direction, they override the weekly and monthly group for control. The reason for that is because they're going the same direction today. We can't identify the weekly and the monthly group as participating, all right? Because these are in control. These are the immediate things that are going on today. This makes the flip very important, as it will either continue to confirm the daily for control or change the control back to the 60-minute weekly monthly groups should those be in the same direction, right? Any other combination relieves the 60-minute control as the others are too conflicted, right? So that means is that if the daily and the 60 are the same, right, they're definitely in control. That's what's happening right now, and that's what's happening today. But on that flip, if that 60 changes back against the daily, right, and the other two are going the other, it's in
Moody memorized that. Moody memorized that. That's what I'm talking about. No, that's important. Yeah. I memorized everything on that, right? He's my mentor. I don't know. I don't know. Maybe I got to show my inboxes so like people could really understand.
conflict, but then we don't know, all right? Then the 60 is still in control. Because if the 60 takes that daily the other way, it flips it back into full time frame continuity the other way. So 60 and daily immediate for can override the weekly and the monthly. 60 is the immediate, all right? And any other combination that would leave things too conflicted, right? So we always want to watch that daily and 60. If they're the same, that's control right there, right? Okay. The weekly group will reconfirm or negate the monthly group as the month goes along, and is reconfirmed by the daily and 60-minute groups throughout the week.
Right.
So once we determine, if what direction the monthly is going, the new week begins, and that either reconfirms that or negates it.
Say, Tobin, you see why I call you the swing guy? It's because I just felt like you was like how you talk and you just start laughing. You feel me, bro? You're a beast at what you do, bro. And then, you know what I mean? You be on the 6 mode. 3 more, man, let me stop.
Right? It either confirms it, right, by going with it, or it negates that monthly group and goes into conflict, right? And it's reconfirmed by the daily and the 60-minute groups every day, right? So it's a constant sequence of series. Monthly starts off, and each week, that week needs to reconfirm or negate what's going on there. And every day, daily and the 60 have to reconfirm what we already know about the other two. So in this example, the 60-minute, the daily, and the weekly groups negated the monthly group as the monthly price was higher than it opened. Then the 60-minute, the daily, the weekly groups negated that by turning into sellers. As for the determination of control, we are very aware of any change in.
The ones that know my universal patterns. Bada bing, bow. Bada bing, bow. Bada bing, bow. And you already know how this got created because I taught everybody. Well, not everybody. I've taught all y'all like, hey, you know what this is. You know what I'm saying? She creates all that. You know what I'm saying? So once you're able to understand that, and this is a failed tweezer bottom, where it's like, it couldn't get back over that opening price. It got over it. However, it tried its best and it couldn't. And that's, those candlesticks, that's a doji. It's like, it's letting us know it's indecision, it's weak, hit the 50, and it's not looking to push over. Yeah, you got the morning star there. However, we see how weak she is, right? You know what I'm saying? This one wasn't that weak. You can see it. You know what I'm saying? Body to body, holding the support. You know what I'm saying? Support has nothing to do with these wicks. That's all liquidity. You know what I'm saying? And you have to understand when you're seeing someone else on a chart that's actually a profitable trader. You know what I'm saying? Like my guy Isaac, he just killed that one trade. Whatchamacallit, you may see a line get drawn at the wick or something of that nature. However, that's not what that person's looking at. And you have to be able to understand that.
Continuity by time and price. So if you look here on this monthly over here to the right, and you'll see the shadow or wick here and now coming all the way back. So what that shadow tells us, at one time that was green going higher, right? However, as the week turned back down, as the day went back down, the red went back down, right? Completely negated that, right? So that monthly was meaningless as far as control is concerned, right? Because the three others are challenging that. We don't know that the monthly group is around. All we know is right now, this week, this day, and this 60, it's going down. Section 4, this brings us to the importance of the uncoupling of the time frames. So what the uncoupling means is
this right here should alert you about any strat trader and anywhere you ever learn the strat from. And they're not talking to you about this, either they don't know or they're not telling you. They don't know or they're not telling you. That's one of the biggest things of the strat.
The first time during any month where the opening prices of the four major time frames occur at different times, right? On any Monday, the daily, the weekly opening prices are the same, right? And the 60-minute.
Fact.
During the first hour or so, on any given Monday morning, 3 of the 4 major time frames are the same. During the first hour on Tuesday, the opening prices of the 60 and the daily group are the same.
Yep.
So thus the earliest an uncoupling can occur ever is the second hour of trading on Tuesday.
Boom.
The first time we can have 4 separate openings. So this does not mean that we don't trade until Tuesday. Right? It means that we gain more quantitative evidence into which gauge the probability of our trades based on the separation of the participation groups. Right? That's where we can start to identify the different groups, who's going to trigger who's affecting what, who's actually in control. So the importance of the uncoupling is the last day of the month is between Friday and Sunday. So Friday, Saturday, Sunday. The uncoupling does not occur until the second hour of trading on the following Tuesday.
Yeah.
Right? What that means is because the month and the week will begin on the same Monday, for that entire week, the monthly and the weekly group are the same bar.
You feel me,
right?
they told me?
Differentiate. That's when we go back to what I was just saying. Second week, then we can uncouple from the month and we can see if it's going to confirm or negate that. If the month ends on any other day, the uncoupling occurs during the second hour of the following day, right?
Oh.
Because we still have separate groups. So once again, every Monday, 3 time frames.
And for anybody that it may be going over their heads, it's a good description. If you go into the Strat book that I created, there's a nice description in there that he created as well, in there for you guys so that you guys can understand the uncoupling, the days, and it's all there where you can just, you know, write that down in your notes or set alarms, right? That's how I was able to start remembering, right? I set alarms and you'll start to remember, oh no, the uncoupling is about to happen, and you start to look for it and you see it.
Again, the daily and weekly continuity remain the same all day because that weekly bar and daily are the same all day long.
Oh.
And only uncouple from the 60-minute during the second hour of trading when the first 60-minute time frame exhausts.
Yeah, the whole Monday.
Right? So that's on the 60, and the daily will uncouple in the Monday morning. Every day, 2 of the 4 major time frame continuity prices are established. The daily and the 60 start every day, right? And so that's one of the problems when people talk about swing trading is 2 of the 4 major time frames start over every day, right? It's a continuous series. Are they going to reconfirm or negate everything? So the uncoupling at any given.
And when I heard that, that's when I started making my own time frame. Boom. Why? I'll leave that for another class.
Day cannot occur until the second hour of trading because the 60 and the daily will be the same for the entire opening 60 minutes.
True.
Event continuity,
Oh.
section 5.
So beautiful.
So events that occur during the trading day also form an important continuity level, right? An event can either be a known event as well as unknown news events as well. Examples of known news events are going to be the weekly oil inventory numbers, Fed minute announcements, etc., stuff like that. Right? And unknown news is just unknown news. Right? When it comes out here during the day, it becomes an important continuity level.
Yep.
Right? So unknown events are unscheduled news events occurring during trading.
This is scheduled. So unknown news that could be scheduled is like Powell speaking, right? That's scheduled. We know he's going to be talking. However, it's unknown of what he's going to be talking about, and it's going to move the market, right? And those are the volatility candles that we're going to be looking at, and we're going to create a market structure off of that and be able to trade that. That's what that means.
Day and the continuity level for these events is at the price at the time the news events occurs, right? And that remains solid for the rest of the day, right? The reason this level becomes a new continuity level is because it changes the perception of the groups, as well as the level of aggression for buying and selling, because now they have different information. They have new information on which to trade. So the second any news comes out, that level is important for the rest of the day, whether we're
Right.
above that, right? So that's an additional continuity level. So on Wednesday, when the oil inventory number comes out, that continuity level will be the same as the flip continuity level because if it comes out on the flip. However, that stays in force, or that level is important, right, for the rest of the day, because the perception of the buyers and sellers is changed by that news going forward for the rest of the day. Section 6. Combining actionable signals with time frame continuity. As we continue to put the 3 universal truths together, we increase our evidence to help change our determination from possible out.
Hey, I got a question. Drop a 1 in the chat if y'all like when I pause it and add on to what he's saying to try to simplify it. Drop a 2 in the chat if you'd rather me not do that. All right, I'm back. Okay, we got 12 comments. Let's go through it. See if we got 12 comments. See if we got ones or twos. Ones. Oh, y'all like when I do that? Okay, cool. All right. I'm gonna remember the ones that didn't reply. We got how many people on here? 29? Cool. I'm just joking. Everybody like, yo, what the heck wrong, Booty? I like to have fun.
Comes to probable outcomes. And that's what we want to do. We know what the possible outcome can go up, can go down, go nowhere, right? So the actual signal is going to help determine why something would move. And the time frame continuity is going to juice that up to get our probabilities higher because we know what direction it's going. Several time frames.
Wow. Very important.
So once again, the importance of,
I'm gonna stop it. Take a picture. Bloop. Pull out your phone. Bloop. Pull out your phone. Bloop. Bro, futures, leave me alone, bro.
The flip again, when we combine the actual signals with time frame continuity. Last week we learned that the flip occurs as the 60-minute bar closes and a new one opens, right? As well as being the only major time frame that can form and trigger an actionable signal during the same day. From a time frame continuity perspective, the importance of the flip is that it determines control, right? That as the most immediate time frame, the direction of the 60-minute bar goes from the flip is the time frame that is immediately in control. That's why we watch that 60 so closely. It also determines whether all time frames are confirming or if they're in conflict. So when that flip happens, we already know what the other three are, right? So we'll have a preference of which way we want it to go, right? Doesn't mean that we, there's nothing we can do at that point, but we would prefer that time frame continuity, full time frame continuity off the flip, as opposed to going to conflict.
Facts.
When we combine with this with the potential actionable signal triggering after the flip, the potential of change occurs as a new actionable signal changes the known conditions of the price. Because the actionable signal on the flip can trigger on the same day, that signal then confirms actionable signals that are in force, thus creating a combination.
Yeah.
This negates other actionable signals, putting continuity in conflict. So what this means is that because not only do we have a time change on the flip, we can also have a known actionable signal change, right? Because we could have an inside 60, we could have a 60-minute hammer. Do we know anything else? Do we already have things in force? That way, not only does the time frame confirm or conflict, but do we have a confirming actionable signal on to reconfirm or negate what we already know in the other actionable signals? All right.
Take a screenshot.
Although the flip is an important form of new major signal and continuity level standpoint, we want to define price conditions across all time frames, right? Using actionable signals and time frame continuity. And we have no opinions and speak only in description of what we know to be true, right? On any given flip, we want to evaluate what conditions will be created if actionable signals are successful or fail. Also, how they will confirm, conflict, or change.
So you're gonna get confused. Actionable signals is only a handful of them. It's a hammer, a doji, all dojis, long-legged dojis, dragonflies, the regular common doji, right? Any cross, right? Those are actionable signals. And as well as hammers and pin bars, inverted hammers and pin bars as well. Those are the only actionable signals. So to simplify it, is only the doji, the hammer, and the inverted hammer. The inverted hammer and the hammer are also pin bars. And that's how you can simplify it and always see what's going on the chart.
Time frame continuity and actionable signals. All this stuff matters. All this stuff's gonna wind in together, and that's why the flip is so important during the day. We focus on that. Combining actual signals with time frame continuity, the importance of the flipped concept. All right. This is akin to playing billiards. Right. If you focus on hitting one ball in without evaluating the effect of your next move, you're not a very good pool player. Right. Like straight up. Right. Good pool players take shots that will leave them another shot and so on. This is true for us as well. It helps us decide what actionable signals we want to take. What will things create? What's going to happen if this works or if this does not?
Tina, you feel me? Like, what would things create? Is it going to work or is it not? That's why I love to learn, and then I make it my own. So it could just be my own. So even if you go read this or understand this, you're still not going to know how I'm trading until you learn from me.
What will the resulting condition B, right? That's very important. We're always going to be looking ahead because we're looking to add stuff as things continue to go our way. So should something work, what would happen next? And so on the flip, if it goes red, what would we know then? If it goes green, what do we know? If it goes inside and up, what would we know then? All this stuff is going to matter. So what we can do is we can look at some examples. We'll do that in the next video. It's just the beginning. Video 1.
He says just the beginning.
On the road of understanding what time frame continuity is, who's in control, and then how we're going to put these actionable signals and time frame continuity levels to work. So we'll be back for video 2.
And that's why I'm doing it the way that I'm doing it. Why? Because I know I'll be doing long classes and like people like, nah, run another one, Moody. However, you got to be able to digest this. You know, the market's going to be open tomorrow. Not even that. Futures is open. Bitcoin is open, where you can take what you've learned and implement it on other things. One thing that I will do for you guys, though, I'll give you a sneak peek of what it's going to look like next week. What is a time frame
I'm Rob
continuity?
Smith of the In the Black Quant Edge VTF here at T3 Live, and this is
I may do 2 of them next week.
the Quant Edge 4-week coaching program, week 2, video 2 on time frame continuity. All right, so we can get to this, and we got through a bunch of stuff. And remember here, the disclaimer as you read that along. We're getting to you got the actionable signals.
Yeah, we'll go through 2 of them. We'll do this one and part 3 on next week. Most definitely. How many people seen this video? Only 2003, 7 years ago? Jesus Christ. I wonder how those people doing. So yeah. I hope y'all enjoyed it. Did y'all enjoy it? Did y'all understand anything? Do y'all have any questions about time frame continuity?
You better have me go change up my chart right now as we speak. Right now.
Literally. But watch, you're gonna see when I get on the charts and I start like, look, bro, this is what you want to do. This it's so simple. It's so easy. It really is, man. It's truly simple and easy. It's just it takes time. You know what I'm saying? It takes time for you to be able to develop your niche on like how you want to be able to do it and things of that nature. You know, that's why like when you see me live trade, it just looks so easy, so simple. I'll be like, oh, it's gonna measure this move, it's gonna do this, and you're like, dang, it actually did that shit. It's just the consistency of doing it, and consistency doesn't mean that, you know, I'm trading every second of the market or anything of that nature. Consistency has nothing to do, like say if you get up every single day and you grab your phone, that's not that you're consistent at grabbing your phone, that's just your habit. Consistency has nothing to do with that. Consistency is just, you know, if you want to learn charts, right? How do you be consistent on learning charts? You know, you carve out maybe an hour or 2 out of your day and you learn charts. That's what's being consistent. You know what I'm saying? Whether you did it every day or whether you did it every other day, you know what I'm saying? It's just like the algorithm. You know, some people think consistency is posting every single day. That's not consistency. You know what I'm saying? Consistency is just you putting that effort in and making sure that you're putting that effort in and you're consistent at that. You know what I'm saying? It's just like you're consistent at your job. You put that effort in at your job, whether you're mad or whether you're sad and things of that nature. You know what I'm saying? So it's the same thing with trading. That's why I always say that trading is a representation of yourself. Trading is very simple. What's not simple is the psychological part behind it. It's you, it's your emotions, it's your greed. That's what makes it harder for the next individual. You know, it's not that you don't know where to take profits at. It's the fact that the market doesn't always just move up, right? Sometimes it does, sometimes it doesn't. However, what it's going to do is going to trend in either direction. And there's only going to be three directions that it can trend in. It's going to be an uptrend, a downtrend, or consolidation, which consolidation is just that you're stuck in an equilibrium, right? And it could be a large range or a small range, and you're just stuck in that equilibrium. The smaller the range, the quicker it'll break out. The larger the range, the longer it'll stay inside of that range, right? Yeah. Anybody got any questions? Oh, my bad. Yeah, in the chat. Thank you,
Yeah, I
bro.
got a question.
Yeah.
Jared.
What's up, Jared?
Yo, yeah, I was on a work call earlier. I'm just jumping in on the call, but what you was talking about yesterday, right? On the Spy, how you were showing like the morning star. I believe it was on like the 14 or the 16-hour time frame.
Yeah,
Bro,
don't
you
tell,
called that
don't put
shit.
all my don't put all my juice on there.
Oh
I'm
man.
just playing, I'm just playing, bro. You can tell anybody
Bro,
they can't see what I see. Go ahead.
I just wanted to say you called that shit, bro. But when I was trying to look for it, I couldn't get that time frame. So I'm pretty sure that's due to like you having like a different type of membership, right? With Trading View, because I couldn't see those time frames.
Nah, you gotta create them.
Got to get them.
You gotta create them. It doesn't matter what
Create them. Okay, I
yeah, the
got you.
difference stops you from like if you don't have premium, you won't be able to get like the seconds charge. That's about it.
Okay, I got you.
Yeah.
But yeah, you called that shit, bro.
It was perfect. It was like on
Perfect.
point. It was just like how can you miss this? You ain't see in the Discord, and I was like, hey, look, it's bullish today. Make sure you buy calls, only buy bounces.
And I seen
Yeah,
the
get it
tweezer.
on the pullback.
And then they formed the tweezer at the top, and then it, you know what I mean? It pulled back off that tweezer too. It's crazy.
Mm-hmm. And none of that is the strat. It's just how I trade price action. Thanks, thank you. Everybody that said thank you, you're more than welcome. As always, you're a blessing. You're a blessing as well, brother. Thank you. Not yet, but I will after it cooks. I know you will. You stay with questions. Thank you. Remember to stop the recording. Oh yeah. Thank you.